Hello everyone and welcome to GMT Partner video channel, where you can find some interesting videos related to trading and investing on global financial markets. The topic of today's video is double barrel gun short-term trading strategy. As promised in my last video, I share the strategy with the subscribers of my video channel and hope that this topic will be interesting and useful for both beginners and advanced traders. It should be noted that this strategy is quite simple to use, so first of all, I would recommend it to the beginners who prefer intraday trading. So here is the plan of my presentation today. In this video, I will tell you about the rules of my trading strategy, money management technique, and its performance. However, before we start, let us first recall one thing. What is the key to success of a trader in the financial markets? Or, in other words, what elements are necessary for the trader to achieve stable income in the financial markets? In response to this question, any professional who makes money in the market will tell you that in order to be successful, trader needs clear and accurate plan of actions for every possible market situation.
So, what are the key elements of this plan? First of all, this plan includes all methods and tools that any trader relies on while making his trading decisions. It may be a decision to buy or sell any particular investment instrument, or to stay out of the market. The second component of success is money management. Simply put, money management answers the question, how much? This refers to the problem of choosing the right number of contracts trader must have in each trade, as well as whether or not this number will increase or decrease from trade to trade. The first two factors constitute a trading plan. This is what we are going to talk about today, and analyze in detail how to make a trading plan or a trading strategy, which is based on different methods and tools of technical analysis. On the other hand, having a good trading strategy and sound money management technique does not always guarantee stable income to the trader. Because there is a third, more important aspect is present here, the psychology of a trader. In my view, this factor determines the half of success. It is because of the psychological factors most traders lose money in the market. The psychology of a trader refers to the psychological state of the trader prior to making a trading decision, and in the process of the trade, as well as how it affects the final outcome of traders' activities in the market. In other words, psychology defines whether or not a trader is willing to embrace the financial risk in order to make profits in the financial market. Whether or not a trader is ready to deal with his emotions, such as fear and greed. What is the impact of uncertainty, which is constantly present on the market, on a trader's emotional state? Does a trader have enough perseverance and discipline to execute his trading plan? Most of the people who lose their money in the market do not have any clear trading strategy or action plan at all. They come to the market and trade with the hope to get lucky. Their actions are based purely on their intuition. Unfortunately, such a method does not work, and won't result in a stable and permanent income from the market, because intuition and luck is not enough for this to happen. In order to create your own trading strategy, you must answer a few simple questions. Here they are. What investment instruments is the trading strategy going to deal with? What analytical methods is the trading strategy going to be based on? What is the concept of the trading strategy? Or in other words, how is the trader going to get an advantage over the other market players? What time frames are going to be used by the trader in order to analyze the current market situation? What analytical tools are going to be used by the trader in order to make decisions related to buying or selling a particular investment instrument? Traders should clearly define all rules and conditions, upon the occurrence of which a long or short position is opened and closed. Traders should also clearly define the rules for calculating the volume of open position in each transaction. The last but not the least important thing the trader should pay attention to while creating his own trading strategy is a strategy performance, or in other words, all necessary statistical information collected during strategy backtesting on historical data and in the process of real-time trading. So, now, using the double-barrel gun trading strategy as an example, I am going to answer all above questions. As I mentioned before, the double-barrel gun trading strategy was developed in late 2002, and was originally designed for trading three major currency pairs: Euro versus US dollar versus Japanese yen, and British pound versus US dollar. Currently, in addition to the instruments of Forex market, this strategy is also used for trading futures and stocks. Basically, using this strategy, you can trade any investment instrument with good liquidity and sufficient volatility. In addition to Forex market instruments, I can recommend the following instruments of commodity and stock market: gold and platinum, Brent and WTI crude oil, copper and aluminum, soybeans and wheat, US and German government bonds, stock indices such as Dow Jones Industrial, S&P 500, Nikkei 225, Hang Seng, as well as individual stocks such as Apple, IBM, Google and others. As for the methods of analysis, the double-barrel gun trading strategy does not use the fundamental and quantitative analysis. All decisions related to buying or selling a particular investment instrument are based solely on technical analysis tools. Only a few simple and reliable technical indicators constitute the basis of the whole trading strategy. As for the operation principle of the double-barrel gun trading strategy, it should be noted here that trading strategies can be classified in different ways, but for myself, I have divided them into three following groups. The first group includes trend-following strategies. The second group includes range-bound strategies. And all other strategies, in my opinion, belong to the third group. You may ask why. The fact is that in my trading, I use technical analysis. And in terms of technical analysis, a priority for any trader, as you know, is to determine the direction of the current market trend. The market may develop an uptrend, downtrend, or be in a state of consolidation. Or, in other words, it can move sideways. Accordingly, because of this reason, I prefer the classification of trading strategies suggested above. Double-barrel gun trading strategy belongs to the first type of strategy. It is a strategy that follows the market trend. In my opinion, it is much easier to make money in case the market has formed a strong trend. So, in accordance with the rules of the double-barrel gun trading strategy, in case the market has formed an uptrend, trader is only allowed to open long positions. Accordingly, in case the market has formed a downtrend, trader is only allowed to open short positions. Finally, if the market stays in consolidation, then trader is not allowed to open any positions. Double-barrel gun strategy uses the following analytical tools. First of all, it uses a pair of moving averages, simple and exponential type, with the parameter of 200 intervals. The third moving average is 10 times shorter than the previous two. It is exponential type moving average. The additional analytical tool of this strategy is the Index of Average Daily Volatility, ADV for short. As for the time frames, the double-barrel gun strategy uses only one single time frame. 10 minutes chart, both for analyzing the current market situation and for determining the entry and exit points. Any other time frames are not used here. It is necessary to mention one important point. In case your trading platform does not have such an option as 10 minutes time frame, then you can use 5 minutes chart instead of it. In this case, the parameters of technical indicators used in the strategy should be recalculated in accordance with the parameters of 10 minutes time frame. For example, I use MetaTrader 4 platform, which does not offer standard 10 minutes time frame. So, in order to analyze the price chart in the MT4 platform, you will need to build a 5 minutes chart and multiply the time interval parameters of moving averages by 2. As a result, you will get a pair of long-term moving averages, SMA 400 and EMA 400, and one short-term moving average, EMA 40. Here is the strategy on the screen. A pair of long-term moving averages with the parameter of 200 intervals, red and green, and one short-term moving average with the parameter of 20 intervals, blue. The intersections of a pair of long-term moving averages and one short-term moving average, as well as their convergence and divergence, generate the trading signals of double-barrel gun trading strategy. The long-run objective of this strategy is to profit from daily short-term market movements that can last from a few minutes to several hours. Trading in accordance with the rules of double-barrel gun trading strategy, on average, will get you about 5 to 10 transactions on each financial instrument within 1 month. Most of the transactions of this strategy are open and closed within one trading day.